Hello traders and welcome to another video review. Today is Thursday, November 9th, 2023. Let's find out what is going on the Forex economic calendar today. Data from Japan had been published overnight, and as you can see, those data were adjusted current account and the current account, which were both less than the forecast. The CPI data from China were published as well, and it looks like the CPI data are going lower than expectations, so kind of a good situation here in the China, but the producer price index decreased even lower from minus 2.7 from the expectations was minus 2.7 and the actual reading was minus 2.6. During the London session, we got the speeches from the Bank of England member Powell at 9:30. At 10 o'clock, we got the release of ECB economic bulletin, and then we got some data from the Mexico and in form of the CPI. Central bank reserves from the Russian Federation is expected to be published at 2 o'clock, and then the key event of the day is scheduled for release at 2:30. We got the US jobs data in form of the initial jobless claims from the US, and 1 hour later we got the FOMC member Bostic to give a speech. 2 hours later we got the German Bundesbank's speech together with the BUBA president Joachim Nagel. 15 minutes later, we got the Bank of England Governor, Senior Deputy Governor Rogers to give a speech. And at the end of the day, at 8 o'clock, we got the Fed Chair, Jerome Powell, to give a speech just before the release of the Fed's balance sheet. And then, of course, at the end of the day, 30 minutes to 11 business, the PMI from the New Zealand is scheduled for release. The RAS reading was 45.3 points. So this is how it looks like in the calendar. And I think because of the euro data, we should take a look at the euro dollar first, and then maybe we should take a look at the Australian dollar, mostly because of this data from the China. US dollar, as you can see, is now bouncing from the technical support. It created a little bit of a dip here towards 1.0660, so there is another level where we should expect some kind of a bounce as well, but generally the area between 1.0660 1.0675 has been still used as the technical support. The bounce retraced 50% of the last minor swing to the downside, and now the bearish engulfing pattern was made at the top of the move, and the market is now pushing lower. Of course, in order to extend this move from the extremely over about area below the level of 50 on the area side, the price needs to break below 1.0660 and then test the internal trend line support, and in the case of a breakout we will basically then run towards the 100 periods moving average, located right now at 1.0633. So if this level is violated, the lower line of the ascending channel will be tested soon. So the outlook remains bearish, but if there is a very nice response from the bulls after these levels are being hit, okay, then of course we should expect another attempt to rally or to bounce higher above the intraday technical resistance located at 1.0718. All right, only then we might change our outlook to more bullish. Otherwise, the outlook in the short term remains bearish on the euro dollar. Let's take a look at the Australian dollar versus the American dollar. As you can see, we got our 5-wave increase to the upside that had completed at 6,527 pips, and this pink zone is of course the supply zone. So now it looks obviously very well. We got the retracement of 50% done already, and the market keeps bouncing from the technical support at 6,397. There is 100 periods moving average very close as well, but there is a negative momentum here, and the momentum didn't even break above the level of 50 recently, so there is still a room to the downside, and towards the extremely oversold conditions there is still a room to the downside on the chart as well. The next target for bears is 61% of Fibonacci retracement located at 6,370, and then if this level is violated, we should go as low as 6,316. This is the low from the last day of the October, and it should be tested as the next one. Generally, the impulsive wave to the upside is being let's say treated as the beginning of the new bounce or new trend to the upside. Maybe, just maybe, this is a short-term time frame. However, we need to see a correction and then upside movement. The 5-wave impulsive, let's say, cycle continuation. All right. Otherwise, this situation here will be invalidated. New Zealand dollar. Please remember, we are looking at this because we just had the Chinese data release. New Zealand dollar last trading range is located between 6,050 and the lower level is 5,768. Okay, so that's the zone. Nevertheless, we just made another this is another technical support. The technical support is at 5,867, and we still have a local swing which is located at 5,995. So please notice the fact that we might have a resumption of the downtrend because the bulls were not able to move above the last swing high from the 11th of the October. So that was made almost one month ago. All right, and we are trading below this short-term trend line as well. The market is locked into inside a narrow range between 5,937 and 5,901, so that's 35 pips here. And of course there is the 50 periods moving average from the top, and 100 periods moving average at 5,890 from the bottom. So right now we can of course trade in between those two moving averages for quite some time, as the momentum is hovering around the level of 50. So we are in the neutral situation. We might of course label this movement to the upside as a let's say as the impulsive one, because it's not a problem to label the recent development as the wave 1, A, B, C, wave 2, and 1, 2, 3, 4, 5. That might be still wave 3, which is not maybe that impressive, but it is quite big, and then wave 5. We might label this as an impulsive movement to the upside. However, what we need to see is of course the rebound, the reversal and rebound higher in order to continue this impulsive wave. And with that kind of a momentum, this is not quite possible. Any breakout below the technical support at 5,867 would likely invalidate this impulsive scenario, because we will have a very deep correction that would overlaps even the potential low for the wave 4. So in that situation, even if we move let's say wave 3 here, and that would be the development of the wave 4, so any breakout below this level would get us very close to the beginning of the wave A. And with that kind of a retracement, it's rarely a sign of a hefty correction. It's rather a resumption of the previous trend already, because this wave one is very short. 5,839 is the level of the invalidation, as a textbook level of the invalidation of this situation. So let me make it like, I don't know, maybe blue. There you go. So please keep an eye on it. However, it doesn't actually look bullish at all right now. It mostly look bearish. So the outlook remains bearish after we will get out from this trading range. And last but not least, let's take a look at the Bitcoin, because Bitcoin have done another swing high. Just recently we broke above the channel. We made a swing high at 36,868. Now the market is consolidating the recent gains into the extremely overbought market conditions, and you can clearly see right now that, let me just take my arrow, there you go, that this market is right now extremely overbought. It's obvious. However, you can see it as well that this market is right now making a bearish divergence or negative divergence between the price. As you can see, price is making new highs, and the momentum, which is not making new highs whatsoever. So we should see a stronger pullback soon on the Bitcoin, despite the fact that this market is still trending to the upside. Nevertheless, the market participants needs to see the down move, some sort of the down move, maybe even back inside of this channel. It's hard to say how deep will be the correction, even despite the fact that the market is trending up. Correction is right now necessary for the Bitcoin, because it looks like these recent moves are just simply overstretched. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.